Investors may have lost billions of dollars from the volatility on the share market, but the market operator, the Australian Securities Exchange, is reaping the reward. Full-year earnings rose 7% to $352 million, beating analyst expectations. Still, the ASX faces challenges ahead, including choosing a new boss and the advent of competition. Here's Sue Lannon.
Natural disasters stalling economies and the world's debt crises have shaken investor confidence, but not the ASX bottom line.
Looking at the year in review as a strong financial, operational and compliance performance across the group during a period of very mixed economic indicators domestically.
After-tax profit for the year increased 7% to just over $350 million. Operating revenue rose to a record. Investors got a final dividend of 93 cents a share, fully franked.
So what made the difference and drove revenue 5% higher and earnings 7% higher were mainly growth in the two other large revenue streams which count: listings revenue and derivatives revenue, which were respectively up 3% and 17%.
Robert Elston says market volatility is here to stay for a while.
I suspect it's at least got somewhere between 1 to 3 years of life. Volatility, as I think David Murray has said publicly and others, is probably going to be the new norm.
The ASX has some challenges ahead, including who will replace Robert Elston. The company says the new boss is likely to be named by the AGM in September. Mr. Elston announced he was stepping down nearly a year ago.
It's done a worldwide search, so it will be an external appointment.
Robert Elston leaves large shoes to fill. He merged ASX with SFE. He's managed the business through unprecedented volatility, regulatory change.
Another challenge is competition. A second market operator, Chi-X, has been granted a trading licence by the federal government and is expected to open for business later in the year. In a spirit of cooperation, the ASX has agreed to a 5-year deal to allow Chi-X to use its settlement systems to finalise trades.
We are ready for competition across our entire value chain as and when it may become a reality.
They've cut their costs. They've introduced a trading platform that's as fast as that offered by any rival operators.
Others are not so confident.
It's definitely going to lose market share and margin in cash equities trading. Chi-X is going to take significant share. The question is how much, and it's difficult to know because it's going to depend on the competitive interaction between the two firms at the time.
The planned tie-up between the ASX and the Singapore Exchange was blocked by Canberra. Robert Elston was silent on where to from here for growth.
We talk all the time to our counterparts around the world on a wide range of subjects. If your question is, are we currently in dialogue with a view to making an announcement? Most definitely not.
It's difficult to see where another potential merger partner could come from.
ASX shares ended the day down 1/3% at $29.40, even though the result was in line with forecasts.